JPMorgan said fourth quarter profit more than quadrupled, but we did see a miss on what they call the top line, revenue by about $1 billion.
We certainly did, and we're going to check in right now with Jason Tyler. He is the Senior Vice President and Director of Research Operations for Ariel Investments. He is joining us, Ariel, holding roughly 280,000 shares of JPMorgan Chase. Jason, always good to see you. We know, obviously, you have some skin in the game here. So based on what you've seen so far, would you buy more?
Yeah, we feel very good about it. Good morning, Deirdre. Good morning, Erik. I think it was a very good quarter. If you think about it, the top line was a little bit off, but JPMorgan ended up better on expenses by about $1 billion than the street was expecting, and frankly, about $1 billion on the provision side. So there's a lot of good fundamental news.
Okay, well, $1 billion on the provision side, Jason, means that they're perhaps not being as conservative as some people expected. Is that okay in your mind?
Yeah, Jamie's one of the most prudent managers of the balance sheet in recent banking history, let alone what we have today on Wall Street. And so, if he feels comfortable with reserve levels where they are, then I'm gonna be comfortable alongside him. And he's obviously built a tremendous balance sheet with 11% Tier 1 capital, so the balance sheet's in very good shape.
We did see not just fixed income trading revenue in the investment banking business come way down, principally in fixed income trading. We talked earlier about the fact that JPMorgan has brought its appetite for risk way down. VAR, it's not a perfect measure of risk appetite, and it proved somewhat useless during the credit crisis, but that does help explain the story. Are you comfortable, again, you talk about being comfortable with Jamie Dimon's conservative approach to banking. Did they leave too much money on the table by any chance in the fourth quarter by taking that risk appetite down and fixed income revenue following it?
You know, we're never going to be upset about that. And in hindsight, you may say that you left a couple of cookies on the table that you could have taken along with you. But at the end of the day, this is still about survival. Everyone still is thinking about how to grow earnings now. But frankly, things, and Jamie and Mike Cavanaugh talked about it in the release, that things are still choppy out there. So they're going to be prudent and err on the side of being able to fight another day and get to the earnings potential that JPMorgan has in the next couple of years.
Jason, I want to ask you, I mean, you just talked with Erik there about the high point in that revenue picture. The low point, though, is still what's happening with the consumer, with delinquencies. Jamie Dimon in the press release saying he does remain cautious. We know that's sort of part of his tone. But what do you make of that part of the business right now?
Well, Deirdre, you're spot on in that Jamie's always going to exhibit cautiousness, and so I don't read too much into that, frankly. What I did find interesting was the fact that they made comments about how bad charge-offs in credit card could get, both on their organic portfolio as well as on WAMU. Those numbers are high, and I think that's what's leading the stock to be under a tiny bit of pressure this morning, despite what overall is very good fundamental news.
Jason, our colleague John Ehrlichman has been walking us through the compensation numbers for the fourth quarter at the investment bank, coming way down from the third quarter. Do you think that Jamie Dimon blinked a little bit here, bowing to some political pressure, or does this have more to do with the way he wants to manage the business and the way he wants to at least set the standard for the rest of the street, which we won't see until next week?
Well, it's a great question, Erik. I saw John's analysis a few minutes ago, and I think the numbers obviously tell a story that compensation came down, but it's hard to tell what was accrued for earlier in the year, and so you'd have to dig in pretty hard and ask some tougher questions to Mike and Jamie to get a sense of really what the overall compensation picture was like. The earnings release won't tell that whole picture.
Very quickly, though, if in fact they did bring it down in the fourth quarter, less than because of provision, or at least accruing, would you be unhappy, just quickly, that they're taking that approach?
No, it wouldn't surprise me. I mean, Jamie and Mike as well are known for saying we're going to run the bank the way we want to, and we're not going to listen to what Washington's saying unless it's something from a regulatory perspective. They're always going to do what's prudent, but they're going to do what they think is right. And so if he's bringing comp down, I think he's saying we're not going to lose people, and we owe shareholders a higher return.